Hello, this is Cynthia Fick, and this is the June 13th stock market update. I've missed you. I hope you had a great start to your summer so far. I was in Costa Rica visiting my daughter Hannah, who's there volunteering with children for a college program. So I'm back, and there's been, things are looking a little better. I just want to remind you a little bit of what I've been saying over the last few months. Just keep an open mind that things may be a little better than you think they are, and it looks like that is the case. We had a CPI number come out this morning, and the number is down to 4% from 7.7 last October. That's our inflationary, that we've been concerned about. And the stock market has held in pretty well. I told you we were in a very tight range, and it was going to resolve itself one way or another, and it has resolved itself by breaking upward. Again, we're trying to think long term. We're thinking not next week, 2 weeks. We're thinking 3 months, 6 months, 3 years, a much bigger time frame. And again, I'm encouraging you to think, can maybe consider that things are going to be better than what we've been thinking. So let's go ahead and look at the charts. Okay. Let's go and look at the S&P 500, and I'm going back all the way to 1993 and looking at, major downturns we've had, and then things that were happening in the market, specifically with momentum, and then what the result of that was. So let's look back at 94, 95, kind of a downturn in the market there, and we see where the momentum after the market had reached a low went sailing upward. And again, it happened in 2003, 2009. After the market had bottomed out, the momentum went sailing upward. It did it again in 2009. And again, this is what's happening in 2023. And here we have, again, a nice formation where we may very well have bottomed in October of 2022. The next chart, we're going to go back and look even farther back on the S&P 500. And this is a 200-day moving average of the S&P 500 over a long period of time, going back to 1990. And you can see every pullback where we've touched the 200-day moving average, and kind of what happened during that time. This again is momentum, and you can see what makes this time frame in 2000 different than what's going on right here in 2022, 2023. And that is, is there another leg down, is I guess what I'm saying here. Every time we touched this line, we tried to rally, and then it broke through. But if you look here, the momentum line was never breached over the zero. And it happened in 2000, 2001, 2008, 2009. Same thing happened. There was no upward moving, breaking through that zero on the momentum line. What makes it different right now is that we held the 200-day moving average, and we have crossed above the zero line. And again, that's just not what happened in 2000 and 2008-9. Okay. Let's look at some projections of what happens when we have a certain criterion going on. There have been only 20 other periods where the S&P 500's 200-day moving average made a 52-week low and then rallied more than 1% off that within the next 3 months. So there's only 20 times in the history of the stock market that this has happened. 1 year later, the S&P 500 average gain was 18.2% with gains all 20 times. So it's only happened 20 times, and the average gain was 18.2%. You can just see here the different times the S&P 500 was trading at its 52-week low and then rallied more than 1% off that over the next 3 months. So the average is 18.2%. Let's look at a chart of the NASDAQ 100, the largest stocks in the NASDAQ. What does well when inflation comes down, and they may have to lower interest rates, maybe even as early as next year. Large company growth stocks, specifically some of the big name tech stocks. And the NASDAQ 100 gave off a very huge signal, a buy signal of stocks that were at their 52-week highs. And when those signals go off, it happened May 8th. Here's what happens to the stock market every other time this has happened since 1987. It just shows you what the NASDAQ 100 does within 1 year, 2 years, 3 years. You see, there are some red periods of time where the market did trade down, but there's a lot more green. There's a lot more positive going on there. The average in the 1 year time frame is the NASDAQ 100 is at 14.71. 2 years, the average is 34.63. And 3 years, the average is 49.31. There have been some drawdowns. The average is down 8% or so, but a lot more green on this chart than there is red. So there's a lot of reasons to feel optimistic, even during what continues to be an uncertain time. A couple things we're going to do. We've had cash. We've gotten more defensive. It served us very well, and now we may be putting some of that to work. The first thing that we're going to do is take money out of since we kind of got through the debt ceiling crisis and they resolved that, we're going to take money out of the FDIC insured and buy a higher yielding treasury money market for everyone. So we should, be really increasing the return we're getting on some of the cash. And for those of you that have, through our constant conversation said that you want to put more money to work in stocks, I'm going to be looking to buy. You may be thinking, what is going to lead this next market upswing? And, it's a buzzword right now. Everybody's talking about it, but artificial intelligence is going to change the world as we know it. Kind of like when we were talking, remember in the late 1990s when we were talking about the World Wide Web and what kind of things were going to happen because of that? We had no idea. And I think the same thing is true right now about artificial intelligence. And a lot of the big companies are investing tons of money in that. There's Microsoft, there's NVIDIA, Amazon, Google, big companies, and there are a lot of smaller ones also. But these are the things we're watching, and we're going to get in on this next wave of what could drive this market for a nice little rally. Plus, for 2 years, this market has been trading sideways. I know you might not realize it, but I sure have. And we're breaking out. Again, it's not going to be a straight shot up. I hope it isn't. I will almost guarantee you it won't be a straight shot up. Okay, but let's look out 6 months, a year. I believe good things are going to happen in the long run, and I ask you to keep an open mind. I will talk to you next Tuesday. Have a great week until then. Bye.